Good afternoon. This is Brian Split with Allendale on Thursday, January 6th, 2011 with your closing commentary. We did have a sharply lower trade and finished today in the grain markets. More liquidation similar to what we saw on Tuesday. The nearby March corn contract down 17.25 cents today at 6.02. We were able to match and hold the low from Tuesday of $6.25. So $6 is becoming important support here short term. The new crop December 11 contract down 8.25 today at 5.50, and it was estimated on Tuesday we had selling of about 11,000 contracts of corn by the funds. They bought 12,000 yesterday and sold approximately another 15,000 today. So again, this doesn't appear to be liquidation, doesn't appear to be fund buying. This is just rebalancing. You've got some funds that need to buy to rebalance their fund and some that need to sell. And we would expect that we're going to continue to see some of this volatility over the next couple of days as we go into the report. On the soybean side, we did have March soybeans down 15.5 at 13.78. The new crop November contract down 9.5 at 12.86. Nearby Chicago wheat March contract down 19.25 at 7.89, and the new crop July contract down 18 cents today at 8.28.25. A lot of the rally yesterday was attributed to the selling on Tuesday being overdone. Early this morning, there were thoughts that there was going to be some selling today because yesterday's rally was overdone, so go figure. But again, we're going to point back towards the fund rebalancing. Again, you've got index funds that need to be selling some of their corn and soybean wheat contracts. Other funds may be putting in some long-term money into the grains, again with the bullish long-term fundamentals here, holding some support under the market. One other thing that was also notable today is that we had quite a bit of spreading between the old and new crop contracts in both corn and soybeans. So the nearby contracts down quite a bit more than the deferred contracts, and it looks like some of the longer-term money may be rolling out to December 11 corn and the November 11 soybeans here. Also, we had a private analyst firm this afternoon, or actually this morning, around 11 o'clock this morning, provide some estimates for the Argentine and Chinese corn production, and both of those were bearish numbers. We had a number of 23.75 million tons for the Argentine production, and that's actually down from that firm's previous estimate of 24.4, but well above the Buenos Aires Exchange, which has it at 20.35, and other private firms that are currently estimating below a 20 million ton production based on the recent dryness over there. Also, the Chinese production was increased from 168 million tons to 172.5. So again, that's a pretty good bump up in production. Other private firms in China earlier in the year were suggesting that production was down as low as maybe 155 to 57 million tons of total production, and that China would have to import corn. So this is a little bit of a change from some of the rhetoric that we had a couple weeks to months ago. And we do have a report next Wednesday. This is the same report that has topped the grain market the past 2 years. So as a producer, if you're out there holding some old crop grain, or if you haven't done anything on the new crop, it may be advisable to do a little bit of soul searching here ahead of this report and really decide how greedy you want to be and how confident you are in your bullish position, or if we should be looking at getting some coverage here ahead of this report on some of that crop. So something to chew on there. As far as other markets here, we did have the livestock strong today, led by the hogs. We've got some strong cash. Supply outlook is looking friendly, and we had some bullish price action after yesterday's recovery in the futures. So yesterday the cash is up $1.80 national average, and we did have February finish today up 175, and April up 192 here. So good strong closes here for the Feb futures and the April. Looks like on the cattle side we were strong early in the day based off of some support from the hog pits, but those markets did peel back, still finished higher. The Feb contract up 10, April up 25, but we are holding a pretty good premium to the cash market at this point, so that may keep these futures grounded a little bit here short term early in the year. But a lot of the longer term perspective looking for some higher trade in these futures, and very strong cash, especially if the grain markets remain at the levels they are with $6 corn. As far as outside markets, looks like we do have the Dow futures down about 35 points. S&P's down maybe 3.5, and the Nasdaq's actually trading about 3 points higher. So pretty steady trade here in the equities today. Dollar index has had a sharply higher move, up 92 yesterday, up 55 currently, and that is also providing some pressure on commodities. Looks like crude oil settled $1.92 lower today, just above $88 support after briefly trading through it. But again, Allendale's looking for a little bit more of a setback here to deeper support before looking for a longer-term bullish move later in the year. Cotton also worth mentioning today. Traded nearly limit up early in the day. Again, the same private analysts that put out the corn estimates increased their estimate for Australian cotton production. So that sent that market from nearly limit up to trading limit down late in the session. So big reversal in price action there. And again, that's another market that's going to be affected heavily by the report next Wednesday. So again, we would love to have you come to our conference that we have at the end of the month, January 21st and 22nd. So we still have a special to get you both the reservation for the conference and also 3 months of our research. So give us a call on that, 1-800-2MARKET. That's 1-800-262-7538. Or you can reach us online at www.allendale-inc.com. And good luck trading tomorrow the rest of the week. Thank you.